This is 2022, and all you're gonna hear is crypto, NFT, etc. So, how exactly do these people over the internet make money out of it, or how to make an NFT? But do you know what? Literally anyone can make an NFT. Even you can. So, you don't have to worry about that. But there's this one question that lies all above it. Will the NFT you make or buy become a lousy investment? That's pretty tough question, right? Then why don't we look into it? In today's episode, we will be looking into ways to avoid a bad investment in NFTs, so let's jump straight into it. Hey folks, and hope you guys are doing good. Welcome back to another exciting episode. What are you waiting for? Subscribe, like, share, and click on the notification bell to get the latest and key financial stuff on your feed. The market for digital artifacts is thriving, but that doesn't imply they're a safe bet. To keep track of ownership and establish scarcity, NFTs employ the same blockchain technology that powers cryptocurrencies like Bitcoin. When you buy an NFT, you usually get access to the same file that everyone else can see or download, but you also get something akin to a digital deed of ownership over it. Although NFTs have been available for a while, the market for them has recently burst into a frenzy as mainstream firms and investors have joined in. However, despite the excitement, digital collectibles such as cryptocurrencies, stocks, or any other assets prone to speculation have major dangers that investors should be aware of before investing. That's where you need to pay attention too. The main reason for this is that the technology's greatest strength is also one of its greatest flaws. Because anyone on the internet can make an NFT out of almost anything, there are a lot of pretty terrible tokens out there, and it takes a trained eye to pick out what's worth collecting or investing in. Another issue is that the NFT market is extremely volatile, because there are no procedures in place to assist individuals in pricing assets. The value of some of the most popular types of NFTs increased by nearly 2,000% by 2020. Some of these items, which were once sold for a few dollars, are now worth tens of thousands of dollars. What else do you think is there which affects NFTs? Yes, let's look into liquidity. When it comes to liquidity, how easily an asset can be swapped or cash NFTs are far more like baseball cards or paintings than bitcoins or equities, because every seller must find a buyer ready to pay a certain price for a unique item. Collectors may find themselves in a bad situation if, for example, they spend $100,000 on a top shot moment and the market begins to sink. However, illiquidity may be beneficial since it stops people from making rash mistakes. If consumers don't have the choice to panic and sell their NFTs, the market may avoid the type of dropping prices that triggered the sell-off in the first place. Got it? So, do you think all of your fear regarding NFT investments are cleared? Of course not. There's one thing we didn't go into much. Yes, do you really own your NFT? Most individuals who are new to the NFTs are unaware that there is generally a separation between the token itself, which is a record of ownership that sits back on a blockchain, and the asset it refers to, which is a photo, video, or audio file that is kept elsewhere. Buyers may be left with tokens linking to files that no longer exist if a firm that issued NFTs goes out of business and ceases hosting such digital artworks, basketball trading cards, or other material. There are solutions to this problem, such as storing files utilizing decentralized services, which will become the standard in time, but for the time being, the concerns remains. Apart from all of these worries, what mainly demotivates people from investing are skeptics in this field. Most of them state that the hairy nature of NFT ownership proves that the tokens have no intrinsic value and that the frenzy surrounding them is just stupid. That's not just a matter. Another factor highlighting the risks in NFTs is the potential for fraud and foul play. Well, as an answer to this, it's pretty hard to fake an NFT and it's easy to figure out where one originated from. But that doesn't mean the market isn't filled with deception. Anyone can potentially create an NFT from a file that does not belong to them and sell it to unwary purchasers as their own. Manipulation of various sorts, similar to that seen in other markets, may potentially be taking place. The first one most commonly seen is wash trading, which occurs when someone artificially raises the price of an item by establishing many accounts and trading with oneself. This has traditionally been frequent in NFTs. It's a behavior that expert collectors may easily detect, but newbies in this field may struggle to find. But guess what? Despite the fact that there are several uncertainties in this industry, most investors believe that NFTs have a bright future. A correction is inevitable, but the market will eventually continue to rise and NFTs might become the fundamental asset for the whole virtual economy, spreading well beyond digital art and collectibles. Some people are getting ahead of themselves in these early days, and it is reasonable to expect that NFTs will someday be a trillion-dollar market. Finally, one last topic to discuss, and we know this might be on your mind from the beginning. If you make some effort to make an NFT, are NFTs worth the effort? Well, people have earned a lot of money off of NFTs, with the most expensive one selling for $91.8 million in 2021. But are they a good investment? It's a frenzy right now and many people have no idea what's going on. Because the market is still relatively young and limited in comparison to traditional investments, a few more or fewer purchasers can have a significant effect. There will very certainly be some very frustrated investors in the future when they discover that their NFTs lack a big secondary market of buyers to keep pushing up the prices. So coming to an end of today's episode, what do you guys propose to do? Make NFTs or starting investing? Anyways, what you guys need to remember is that NFTs are a very risky investment. Many investors build their portfolios around low risk and medium risk assets that are secure and produce consistent income. They only invest in high risk assets such as NFTs once they've created a diverse portfolio. If they lose money on the high risk venture, the losses will be offset by the other investments. Consider utilizing this method to increase your chances of success when investing. So make sure you do this with your portfolio too. By the way, same with creating NFTs. NFT investors have the potential to make a lot of money. Given the expenses associated with minting and selling NFTs, not all NFTs will ever sell, let alone make their creator any money. Because of the fees, you must plan for the prospect of losing money on your NFT invention. The easiest method to prevent a loss is to sell an NFT that others would value and establish a minimum price that will more than cover any related expenses. Getting involved with any newer frontier is, of course, a significant decision, and you must make an excellent decision. So, what do you folks think of the future of NFTs and their position? Well, if you ask us, we here are pretty confident about it. In fact, if you take a look at the current market trend, non-fungible tokens or NFTs are the three letters that are trending. Okay, anyways, drop in your views about NFTs in the comment section below. That's all we've got for today. Make sure to subscribe to our channel if you want to see more videos like this one. While you're at it, enable the notification bell so you don't miss any of our future uploads. Drop a like for the video if you're a huge crypto enthusiast. That's all for now. We hope you had a good time watching the video. We'll see each other again in the next one.